Hey everyone, welcome back to Chipstock Investor. Today you get to see our faces for a brief moment, especially yours. We're going to be jumping right into Lattice Semiconductor, an FPGA or field programmable gate array company, pure play company in the semiconductor industry. Over on our Discord server via Semiconductor Insider, we broke down all of the quarterly numbers and what that means for Lattice in the immediate term. But for the purpose of this video, we're going to be focusing on Intel's sale of Altera, their FPGA company, to Silver Lake Capital, what that means for Lattice Semiconductor, as well as the valuation for Lattice.
Before we jump right into our first chart, shout out to our friends over at finchat.io who help provide us with a lot of the visuals to help break down the current valuation and financials for Lattice Semiconductor after this latest update, and importantly, helping us draw the visual comparisons between the financials of Intel's Altera and Lattice Semiconductor.
FinChat has all sorts of tools for you as an investor to analyze businesses all over the board, including KPIs or key performance indicators. You'll see some of those charts in today's visuals as well. You can get 15% off any paid plan with the link in our description, finchat.io/CSI, 15% off any paid plan. We'll start our discussion with this chart, the total return since 2018 for Lattice. Currently, the market cap is around $6.4 billion, and the trailing 12-month enterprise value to free cash flow around 70x.
And this is, of course, important because Lattice is the last publicly traded FPGA pure play that investors can own. We're going to jump straight to valuation because we had a significant event for the FPGA market when Intel landed a sale of its old Altera unit that it acquired roughly a decade ago.
Before we talk about valuation numbers that you're all so eager to hear, I'll just show you the balance sheet for Lattice. They have absolutely no debt. They're an asset-light business, being a fabless designer of those FPGAs. Free cash flow in Q1, $23.3 million. And they dipped into their balance sheet a little bit and purchased $25 million worth of stock. They ended the quarter with $128 million in the bank.
As Casey promised you, here are the valuation numbers, which we will just remind you, as with all cyclical businesses, especially semiconductor businesses and including asset-light fabless ones like Lattice, the valuation metrics will fool you. These numbers make Lattice stock look ridiculously high, especially on a GAAP price to earnings per share basis. But remember, Lattice has now been in a downturn for well over a year now, more like 2 years now. And so these multiples reflect depressed profitability as Lattice has managed its way through what has been a very long, extended downturn, perhaps the longest and worst downturn for a lot of its end markets like automotive and industrial since the popping of the dot-com bubble. So those trailing price to earnings and price to free cash flow metrics can be a helpful starting point, but if you really want to figure out what the actual fair value is for a cyclical business, we need to try to do some detective work and figure out, or at least try to judge what the market is expecting for future cash flows. So we've done 2 reverse DCFs here. Remember, this is not our estimate for what we think Lattice Semiconductor is going to generate in cash flow. This is our estimate of what we think the market likely has penciled in, arriving at the current stock price of, as of this recording, bouncing around a lot between 45 and 50 bucks per share. So we have 2 scenarios for you. The first, the one that we kind of prefer, given that Lattice is cyclical, we're going to pull in just the next 2 years worth of cash flow growth. And then the second one, I know a lot of investors like to just pencil in all of the growth for the next 10 years and then just use a very low terminal growth rate thereafter. But let's start with the first one.
We used trailing 12-month free cash flow per share of 85 cents. That figure we arrived at by taking 117 million in trailing 12-month free cash flow and dividing it by around 138 million average shares outstanding. And then we did free cash flow per share growth of 30% for 2 years, a 7% terminal growth rate, and a discount rate of 10%. And that gets us to around a fair value of $45.
And now you may balk at that 30% free cash flow per share growth for 2 years. But remember, as a cyclical business, if we believe some of these end markets for Lattice are nearing an inflection point where they return to growth, for a cyclical business, they can have very dramatic, like triple digit year over year earnings and free cash flow growth, especially in that first year as they lap the previous year's depressed numbers. So 30% may look very high, but it's actually quite normal. This is why we prefer using this reverse DCF, where we pull in most of the growth just for the first 2 years and then use something like a semiconductor industry average growth rate in the terminal rate thereafter.
But let's compare that to a longer term outlook. So using that same 85 cents trailing 12 months free cash flow per share, but instead of that 30% growth rate, we're using 23% for 10 years for free cash flow per share and only a 2% terminal growth rate. Discount rate of 10% gets us to a little bit higher stock price of $50.
Whichever methodology you think is better for reverse engineering what the market has baked into Lattice's stock price today, it is totally fine. This is just an exercise. Whichever estimate you want to use and whichever numbers you want to plug in here, they're going to be wrong. Okay? But the reason for this exercise and its importance is Lattice and a lot of its peers, especially ones that participate in auto, industrial, and communications infrastructure, they've been indicating that they're nearing that inflection point for new growth. And then suddenly, in the midst of all of this, Intel announces it has landed a deal to sell Altera. Actually, not quite sell Altera, more like selling a 51% majority stake in Altera, and they retain a minority 49% stake to help the new buyer, the new owner of Altera, Silver Lake, a private equity company.
This valuation that's been placed on Altera is kind of a benchmark that we can use to also value Lattice. Intel doesn't make it easy to understand the profitability of Altera because they stopped reporting standalone Altera revenue and operating income after Q3 2024. But what we do know is that Altera is pretty minimally profitable.
If at all profitable. As you can see from this chart here, up until Q3, when they stopped reporting, the numbers, especially on an operating income basis, not so hot. Altera was reporting an operating loss through Q3 of last year.
But for the last 2 quarters, Intel has lumped together Altera and Mobileye and probably some of Intel Ventures into that all other revenue segment. But we do know what Mobileye revenue is because that company is traded publicly. So we can subtract that revenue from Intel's all other to arrive at a ballpark of Altera's sales in Q4 and Q1 of this year.
Now, one other little tidbit we got here from Intel is when they announced the 51% stake that Silver Lake took in Altera in mid-April, they did provide us a little bit of insight on Altera full year 2024. Although Q1 2025, of course, was omitted, that remains behind a closed curtain. So we don't know exactly how all these numbers panned out. And we also don't know if any debt was lumped into the Altera business segment and offloaded to the new lucky owner, Silver Lake Partners. But what we can arrive at from this little bit of information we got was that even through Q4 of 2024, Altera did indeed remain minimally profitable, if at all. You can see even on an adjusted basis, operating income was just barely above zero. And so given that a lot of the end markets for FPGAs continued to try to find a bottom in Q1 2025, we can assume, of course, Altera sales, as we showed you in the previous slide, probably fell a little bit sequentially. And we can also just pencil in probably another minimal operating profit at best to kick off 2025. We believe this is highly relevant information because Altera was just valued at $9 billion on trailing 12-month sales of just $1.72 billion and minimal, if any, operating profit. So if a private equity firm like Silver Lake thinks this is the bottom for the FPGA market, it must think that it can dramatically increase that operating profit for Altera in the coming years. And that's why it would spring for such a valuation, $9 billion for a business that really has not performed so well. What does that mean for Lattice?
As we said at the outset, Lattice is valued closer to $6.4 billion, and it has about a third of the sales of Altera, but their operating income is around $50 million, or a 10% operating margin.
Now, you may be looking at this and you might be thinking, $50 million in operating income, there's no possible way that fetches an enterprise value of north of $6 billion for Lattice. That's crazy. But again, Silver Lake just sprang for Altera at about a $9 billion valuation for a business that is not profitable at all. Either way, it's these kind of deals that can help a smaller, scrappier, and more focused rival like Lattice potentially pick up some market share at the expense of Altera as Silver Lake and Intel try to trim the business back and increase the profit margins. So maybe this is opportunity for Lattice to pick up market share and in turn also boost its profit margins if the FPGA market is about to return to growth mode. Could also be good news for AMD's embedded segment, formerly Xilinx. Microchip is also a sizable player in FPGAs, some other of the IDM business models as well. So we'll have to see how that pans out. But main takeaway here as Lattice Semiconductor shareholders, we like seeing the benchmark set and someone in the private equity market saying, hey, you know what? This part of the semiconductor industry looks like a good use for our money if the end markets are about to go back into recovery mode.